What's going on, people? It's GBP baby. Welcome to another video. It's currently 10 a.m. on Sunday the 2nd of July 2023, and I've got DXY up, of course, and we can see that price delivered just as expected on Friday. Well, it delivered to the premium target that I had marked out. That's in red. So if you go back to Thursday's video, you'll see that I had this area marked out. I believe it's a 4-hour. Yeah, there was a 4-hour fair value gap I liked. You can see we traded into that and then had an aggressive reaction away from that. This aggressive reaction, I was not sure if Friday was going to deliver it. I was expecting a reaction, but I was not. I did not expect Friday to necessarily deliver it, but we can see that it did. And then if we look at GBP, we'll see the same happened. We reached our sell side target, which was, let me drop down to the hourly. We had this, I had my eyes on the sell side liquidity. We dipped down, traded higher, found support at the Monday open, at the Friday opening, sorry. And then we started to trade aggressively higher into that fair value gap I had my eyes on. So it's nice to see that price delivered as expected, but again, for this very aggressive move higher on Friday, I didn't expect that. So now that's going to say a lot for it's going to really set the tone for the new month and what's to come. Next week we have a lot of news releases, high impact ones, so the markets are going to be very dangerous, very volatile, but it's all fun and games at the end of the day. And yeah, it was nice to see us trade up to the rejection block, turned around, and now I'd like to see some kind of hunt for discount PDAs. Since it's the beginning of a new month, we are going to look at IPDA ranges. You'll notice I do already have the markings out. That's because I have had a quick glance at them already. So we should be starting from the beginning of June and then looking back 20, 40 and 60 days. So I haven't actually got my 60-day period marked out yet, so I'm just going to do that really quickly now, which will be here. And we're going to be using DXY because at the end of the day, that's what's running the show here, isn't it? So I'm going to mark out the high and the low. And I'm also going to mark out the high of the low of the other period. If you're not sure what IPDA ranges are, you should go to ICT. Just type in ICT IPDA ranges, and it'll explain everything there, to be honest. But basically, what we're doing is looking back at a 20, 40, and 60-day period, and then casting forward 20, 40, and 60 days. You can see that in this 20 days, we have stayed within the range of the past 20 days. I'll say that again. So within the month of June, you can see how we consolidated. Not consolidated, but we stayed within the range of May's month. So within this 20-day period, I'm going to make this a little bit more clear for us because it might not be making too much sense right now. So this is a 60-day look back period, 60 days, 40-day, and then we have 20-day. And then we're looking forward as well. We are looking forward the same, so 20, 40, and 60 days. There we go, and I'll just move that right into the left. So now we're aware that this is a 20-day period, this is a 40-day period, this is a 60-day period. So what we want to keep our eyes on is the highs and lows of each period. We have this high resting up here, we have this low resting here, and now with our next 20-day periods beginning literally in the new week, we've got this low resting here and this high, this high resting here. You'll also notice that I have this green and this very light green and red differentiation up here. It's because when we were trading in this area, I was looking at a premium and discount, the premium and discount zones, so to speak. So let me just zoom in a little bit, just make this a little bit more clear. So you can see that this line here, which I have marked out, this is the 50% level of this 20-day period. And what I've done is I've dragged that into the next oncoming 20-day period so I can see how we treat this area. If we find resistance at this area, I do expect us to then start running down into these lows resting here and here, which means it'll be a bearish month for the month of July. Let's say we trade back above it and find some kind of, if we trade back above it and find support on this line, I'd then be hunting for higher PDA rates such as this swing high, and this buy side liquidity resting up here. But after seeing the way Friday traded, as you can see, into that fair value gap had marked out and then aggressively down, and the candle is overlapping the entirety of this one. If next week we do trade lower, then from then on I'd like to find some kind of, like I said, resistance here and then to move lower, moving on throughout the month. But yeah, as I was saying, we have a premium and discount zone here, but what's important to recognize is that I've actually split into quarters. So we have this first quarter, second quarter, there'd be a third quarter here and a fourth quarter here. But since we're now trading in this range, I'm going to simply move both of these 2 quarters down. I'll show you what I mean. This is very complicated, by the way, but you'll see exactly what I'm saying. So you see that now we have a premium here and a discount here, and you can see how we traded up into the premium, turned around, and now we're in a discount. So now price should technically be looking for some kind of premium array, and that's why I have this beautiful 4-hour fair value gap marked out. Is it 4 hour? I don't even know where this is from actually. Let's look at the 1 hour. I don't know what fair value gap that is. Interesting. I should probably get rid of that then in that case. Right. Well, regardless, we have on the 4 hour we have a massive liquidity void here and a break in market structure here. So regardless, I'd expect price to want to come back, trade up into this area, into the premium, and then it should sell off quite aggressively, continuing into these lows here and here. So I'm going to mark those out as potential premium arrays, and I'm also going to mark out the break-in market structure. So this was the break-in market structure here. If you've been watching my backtesting videos, you'll know that this is exactly how I pretty much backtest, really pretty much the same thing. This is also a breaker block. Why is this a breaker block? We have a swing high, and then a swing low in between. Actually, is that a breaker block? No, I don't even know. Sorry, this is not the breaker block. I'd say the breaker block is here. Swing high, swing low. Yeah, my bad, guys. So I have my eyes on these lows resting here. I'd want to see price trade into as a breaker. I'll explain why this is a breaker and this isn't a breaker. So this is not a breaker because this swing high takes out this swing high. So this is the next, after this swing high, before the break lower, we have this swing high, which is the next significant swing high. So it'd be the swing low in between these 2 swing highs, and the lowest low in between those swing highs is this low here, therefore making this candle the breaker. Technically it would be this whole candle, and you can see how that lines up perfectly with the entire fair value gap, and how the break of structure happens to be at the 50% level of that. You can't make this up. But I am gonna, well, yeah, we're gonna keep that like that, and then I'm gonna mark out the 50% level anyway. And also, again, it is within the premium zone. Remember, I'm looking at these 2 zones as being premium and discount. Every time price is traded into here, we've had a reaction, in it, out, in it again, into a high premium, and look what happens. So I'd expect price, when it's returning to this area, to want to turn away. So 0.252. 529. I'll make that red, and I'll make it dashed, and then get rid of that. And there we have a breaker that we can keep our eyes on and anticipate price trade into in the coming week. So let's see. So what kind of targets am I looking for? Well, considering, like I said, we stayed within this range, and after seeing this massive reaction last week, I now have my eyes on south side liquidity that will be resting below this low here. and this low here, which is the low of the range. Also, I think it's important to acknowledge there is a fair value gap resting at this low as well. So there's reason for price to want to go down there, because there is, there's an imbalance here, which price may want to draw into. So I'm going to drag that out for the month, and I'm going to type in fair value gap, FVG. And yeah, to be honest, I always say this, I'm going to keep this on my charts, blah, blah, blah. I am actually going to keep these on my charts this time. And at the moment, it's just a matter of seeing how price treats this liquidity void. Like I said, I don't want to see this entire liquidity void get filled in. The highest I want to see it trade to is the midpoint of that hourly break I have marked out. Let's say we trade above this. So let's say we trade above this level here. Then I'd probably stay out the market and I'd wait and see what happens, because yeah. But other than that, I'm happy for price trade into it, and as soon as it enters into this area, I'd be looking for shorts on dollar, which means longs on GBP and euro. And also you can see how they've created relative equal lows here and here. So there's a lot of sell side liquidity that's resting below here. It's possible price will want to take out these lows, then trade up to that, or it will simply trade into the breaker and then come and attack these lows. But we'll have to see in the new week. And like I said, there is a lot of news, etc. happening, so it's best to stay safe. Right, so I'm going to go on to GBP, and you'll see that I have similar markings out here as well. I'll go to the daily in terms of the premium and discount. So considering I'm expecting lower dollar, that means I want to see higher pound and euro. And let's just clean this up a little bit. So one thing to recognize is the fact that we didn't actually reach the open of this order block, but we did trade to the 50% of this wick, which is quite interesting. And then we had this massive reaction trading back into this fair value gap. You can see we've pretty much filled the fair value gap. So now the same thing as similar to dollar, I want to see pound find some kind of support within this fair value gap, as in I don't really want to see us leave it. If we leave this fair value gap, then I'd stay away and I'd wait. But other than that, I want to see us stay within it and then hopefully expand higher and take out this swing high here. We'll drop down to the 4 hour and we can have a better look, and we'll be able to recognize a beautiful breaker right here, this candle, which happens to be at the low of the daily fair value gap. Swing low, swing low, swing high. So that makes this the breaker. So I'd like to see price draw into here, where I'd like to start looking for buys. That's the lowest I want to see price go. Any lower, and like I said, I'll stay away. And then after that, I see relative equal highs resting here, and then up into these highs where we've got also more relative equal highs, and it happens to be the high of this 20-day period here. So there is reason for price to want to trade up into this. And then obviously on the higher time frame as well, we'll jump up to the weekly. You can see how price has found support here, as in volume is staying above. Volume is respecting this fair value gap that was created here. So let me just make that more clear. So there's a massive gap here, and you can see how volume has closed above it. So I don't want to see price. I want to see price continue to respect this fair value gap basically, and then start to push into this area here and into this bearish order block. I'm going to definitely mark out this bearish order block because this is a weekly bearish order block. So this is a very high probability selling point for pound. And then I'm going to mark out this, and you can see we just touched it. So now I'm expecting price to want to push deeper into it. So I'm just going to get rid of all this. And if we drop down back to the daily, again I've got this premium and discount boxes delineated. Remember, this from here, let me make these more clear. My charts are a mess, guys. I am so sorry. I hope you guys are still with me. So we have 20-day periods between here and here, and you can see we've got the high and we've got the low. And I'm also going to mark out the midpoint of that range, which I believe I already have marked out. Yes, I do. Cool. So I'm going to mark out the low, which is here. And the midpoint is this dashed line going through the middle. So I'm doing the same thing as I am on dollar, marking out the dashed line. I'll make it a little bit thicker, and I want to see a price continue. I want to see price continue to stay above this, so that we can push into these relative equal highs rested here. So now I'm going to move this box, this green box here, because now we've got a premium and discount area here. So we traded into a very, although it's a 50% level off the entire range, we're in a very deep discount off this 20-day data range, right? And you can see how aggressively we traded higher. So what we're looking for is, and we're trading to the 50% level. So like I said, I want to see us trade higher, find support on the fair value gap, and then push into this wick especially, and then take out these highs. Hopefully that makes sense. My charts haven't been the cleanest. Obviously we'll see our Monday trades, but it's interesting to look at the up-to-date ranges. Very important. And yeah, I'm just pretty much going to leave it on that. Overall, I want to see dollar find resistance at this level here and push lower, and I want to find GBP find support within this fair value gap and push higher into these relative equal highs. But yeah, that's everything, guys. I've got some more backtesting videos coming out, and I'll see you tomorrow. Peace.